we are in crypto winter. We're about halfway through. I think it ends in September, October. But I actually am willing to say that absent an unraveling of margin, which I'll come back to in a second, we have seen the bottom. That 63 print and the 59 touch intraday was the bottom.
One of Yusko's strongest claims is that Bitcoin may already have reached its cycle low. He points to price levels around $59,000, $63,000 as potentially marking the bottom of the downturn. His reasoning includes 1. Network value models. He references valuation frameworks measuring Bitcoin's blockchain network worth. These models suggested Bitcoin's fair value remained higher than market prices during the sell-off. 2. Temporary negative pressures. Several events weakened sentiment. Falling hash rates, geopolitical conflict, economic uncertainty, fear-driven selling. Yusko believes these factors temporarily pushed Bitcoin below intrinsic value. 3. Crypto winter may be nearing its end. Rather than expecting another major collapse, he argues the market may be halfway through a crypto winter, potentially ending around late summer or early autumn. His conclusion: short-term volatility remains possible, but structurally, Bitcoin may already have established its bottom.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We are going to talk about margin calls. I never going to, because I don't use debt, because you've ranted about this. Like, why would anyone buy an 80 vol asset with debt, with leverage? It doesn't make sense. If you want to avoid getting margin calls, then don't do that. Now, you want to borrow against STRC or something and lever it up one time. Yeah, that's fine. There's basically no vol, but borrowing against, stocks. And so I saw in the comment when you announced that I was coming on this morning, some people said, hey, I'll be there. Another person said, no, I sold all my Bitcoin and I'm going to buy it back in the summer under 50. And I almost replied, well, no, you're not, because we're not. But here's the thing. I don't claim to have any particular knowledge, but here's the thing. We are in crypto winter. We're about halfway through. I think it ends in September, October. But I actually am willing to say that absent an unraveling of margin, which I'll come back to in a second, we have seen the bottom. That 63 print and the 59 touch intraday was the bottom. Now, why do I say it? Well, if you look at the Metcalfe's law value, Tim Peterson, has this great model that kind of tells us the value of the Bitcoin blockchain network. And that was starting to dip sub 80,000 because of a bunch of factors. Part of it was the shutdown of the hash rate. Part of it was the war and uncertainty. Long story short, it got there, and we got pretty well below it at 60. And so if that kept going down, the impetus for investors, remember, investors are my favorite one of the 4 participants in markets. There are investors, there are traders, there are speculators and hedgers, and there are gamblers. The problem is the gamblers cause the pain because they lever up and then they get the margin calls. That's happening in the traditional markets right now, right? We've got these parabolic moves, like literally almost going back in time in semiconductors and chips. And we've got valuations that make no sense. And we've got the highest level of margin debt in history. As a percentage, it's not the highest, but it is in terms of total dollars. So the only thing to me that could take us to a new low so that this guy could actually buy under 50, which I feel bad for him. I don't think it's going to happen. I shouldn't say flip it. I mean, I don't think it's going to happen, is if we don't get a peace plan, which I think we're going to get one sometime, not until Trump puts on some calls. If we don't get that, and this skirmish takes a funky turn, whatever that turn is. And if the disruption in the oil markets and the fertilizer markets and the helium market suddenly gets so acute that the GDP numbers, remember in Q4 when they promised us we were going to have 5% GDP because we're going to have this productivity miracle because
Yeah,
of
we're
AI?
gonna grow our way right out of that baby.
We're going to grow it, right? And the first estimate was 5%. And then, no, I'm sorry, not the first estimate. The GDP now was 5%. But then the first estimate came in at like 3.4. Like, oh, it's close. Yeah, 3.4 is close. And then the second estimate came in at like 1.7. And then the final estimate came in at like 1.4. So we were sub 2% again last year. Shocking, I know. But nominal GDP growth is working age population growth plus productivity. Working age population growth is sub 1%, is going to be sub 1% for the next 20 years. And there's nothing we can do about it. And productivity is sub 1%. And AI doesn't improve productivity the way we measure productivity. It may make you faster cleaning up your inbox, like that woman at Meta who said, hey, fix my email. And it said, I'm going to delete your inbox. She said, no, don't do that. So I'm going to do it anyway. So you could fix it that way. But all of this says we're not going to grow our way out. And so if GDP starts to tank because of the disruption in global oil and particularly helium, and we get like the lockdown knock-on supply chain effects, that could trigger a market drop. And if we get a market drop and an unwinding of leverage in stocks, Bitcoin will fall. Not because Bitcoin should fall, but because when you get a margin call, you don't get to sell what just fell. Like, people who own the trade desk, and I don't even know what the trade desk does actually, but the trade desk, right? It went down 40% yesterday. So if it's down 40% and you owe somebody money, you can't sell that asset to pay. So you have to sell what didn't go down: gold, bonds, cash, Bitcoin. And so that's what happens. Remember 2020, when we had that big, what was it, March 11th or March
12th, I think. Yeah, Black
12th, March
Thursday.
12th,
Yeah.
that March 12th drop. And Bitcoin went down 45% in 12 hours, not because Bitcoin was bad. And that was a great buying opportunity, by the way.
The core message from Mark Yusko is surprisingly balanced. He isn't predicting endless upside or denying risks. Instead, he argues, excessive leverage destroys investors. Margin calls cause irrational selling. Economic growth may remain weaker than expected. Money printing continues globally. Scarce assets like Bitcoin could benefit over decades. Short-term crashes may still occur. Markets could panic. Geopolitical events could trigger volatility. But Yusko believes the larger trajectory remains intact. A world of expanding monetary supply increasingly favors scarce decentralized assets. For investors, his advice is clear. Stay patient, avoid leverage, understand cycles, and remember that survival through volatility often matters more than predicting every market move perfectly.
Thing I can see that would take BTC off of its track, like, I didn't wear my roller coaster socks today, but I wear Bitcoin socks every day. I get them from my friends at Mount Socks. I love that name, by the way. It's like one of the greatest names in a company ever. But Mount Socks sends me this bunch of socks, and I have these roller coaster ones, and I wear them pretty frequently because we are
little coin,
roller coaster, right?
Yeah.
And exactly, it's the but part of the roller coaster ride, remember, is when you lock in the track and you go up the hill. We're kind of in that right now. And I'm not saying we're going up forever and we will have more whoop-de-doos, but I do think the relentless money printing, and it's not so much the US. The US money supply is growing 8-ish%. Great. That's an 8% tailwind to Bitcoin, gold, platinum, whatever. But where the real growth has happened is China. China's growing their money supply at 17%. And, people don't really appreciate the impact of global monetary surges. I mean, they do in the sense that they see things getting more expensive, right? We've all seen the pictures of there was the 7-Eleven out in California with gas 7-Eleven, right? $7.11 for a gallon of gas. A buddy of mine is in Italy. I guess everyone's in Italy. In fact, I'm going to Italy for my 40th anniversary, but he's in Lake Como, and he said he paid $10 euro equivalent for a gallon of gas the other day. So, or petrol, I guess. But you do see it that way, but it's that boiling a frog thing. It's slow and steady, and you don't really feel it until you realize you really can't afford anything. The craziest part of it is what it does to income and wealth inequality, which is partly why Ms. Warren is on the take of the banksters, right? The banksters really like $300 million a day of free money. I mean, think about that. That's a lot of money to make for doing nothing. Like literally, people deposit their money, they give it to the bank. The bank says, okay, thank you. It's my money now. And I'll give you a token of appreciation, 50 basis points, 75 basis points. And then I'm going to lend it out. I'm going to rehypothecate it at 5, 6, 7%. Those NIMs, those net interest margins are about as high as they've ever been. And that is a great business. And look, I love fractional reserve banking. I know people hate it when I say that. I actually do. I think fractional reserve banking created the prosperity that we all love. I say it all the time. Name a country with no fractional reserve banking system that you would live in. I'll wait, right? Can't do it. So I think that the problem is the stablecoin companies are like, well, we could actually pay yield on depositors, and we could still make a nice spread. We can make a maybe 2% spread or and we'll pay people 4 or 5%, and they're held to the no. So I get it. Now I think the thing that's disappointed me most, and this actually is pretty disappointing. I used to think, and I shouldn't name names, but I will. I just think Brian Armstrong was a champion of us, right? I thought he was fighting the good fight to try to get stablecoins to pay yield, and it turns out
he's right there. He can hear you.
I know, but he's not. He likes being told that he has to have high net interest margins, so I don't have to pay my depositors anything. So I'm kind of saddened by that, because I do like and admire, and look, we made a lot of money investing in Coinbase early on, and so I have a lot of respect for what he's built, but I don't like selling out longer than you can remain. That's why you don't borrow, and that's why you don't leverage, and that's why I didn't get a margin call, because I'm not crazy enough to, even though I believe it strongly that we are on the verge. Look, I'm old enough to remember like getting the letter at my desk in March of 2000 from Julian Robertson saying, I'm shutting down the fund. I don't understand anymore. I used to think I knew how to invest. And so I'm giving you all the money back. And, the funny part of that story is it was at the time the largest position in UNC's portfolio, mostly just because of appreciation. I mean, he was an incredible manager, but he was having a bad year, right? US Airways was down, and all the value stuff was down, and he was short, some of the internet go-go names. So he was down in the low 20s, right? With the market up, I don't remember what it was, like maybe mid-teens. And he's like, I'm done. I'm out. And we had the option, because we were super tight with them, to stay in the kind of stub. It was he kind of turned it into a family office. He said, if you guys want, you can stay in, because I actually think this is going to be really good. And I'm like, Julian, I will follow you into battle every time. And, by the end of the year, the S&P, because 2000 wasn't the worst year. We ended up down like 11%. And then we were down like 14, 15, and 01. And the bad year was really 02 when the debt blew up. We were down 20 something. So it was a 50+% peak to trough. But 2000 wasn't horrible. But we ended up in our stub of Tiger up 54% by the end of December in 2000.
Returning to leverage, Yusko emphasizes the goal isn't maximizing gains immediately. The goal is staying in the game long enough to benefit from long-term trends. Avoiding catastrophic losses matters more than chasing every opportunity. This philosophy explains why he avoids heavy borrowing despite optimism toward Bitcoin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.